Hi, it's Tuesday, March 29th, 2016. I'm going to be talking about Janet Yellen this afternoon. Well, it's 6 p.m. London time, 1 p.m. New York time. I've just been listening to Janet Yellen's speech to the New York Economic Club, or the Economic Club of New York. And lo and behold, the markets have moved a bit, in lieu of her speech. And in my opinion, Janet Yellen and all the central bankers are totally deluded. And you might ask, why are they deluded? Well, the main reason why I think they're deluded is that they think that them and their colleagues, in the case of the Fed, the FOMC committee of 12 members, that they know better where interest rates should be, and they know better than the market where things should be. And the other thing that makes me, believe they're delusional is that, they also think that they can control the market and make the market do what they want, either by moving rates or by what they call forward guidance, which is like basically trying to forecast and tell investors what they have in mind. And it's just like sad to watch it because this is basically Keynesian fallacy, in my opinion. Not in my opinion, it is Keynesian fallacy. I've studied economics at university, but after I started working, I also looked into the Austrian School of Economics. And I have to say, you know, if you study the Austrian school, which I have for the last almost 15 years, I've been to the Mises Institute. I've read a lot of the books by von Mises, Rothbard, Hayek, Hans Hermann Hoppe, all the classic Austrian books. You can see that what the Fed's doing is just useless. And to see all these people there at this Economic Club of New York, uh, listening to her saying that interest rates might rise 5 more times in the next 18 months, but if this happens then we won't. If this happens we will actually cut rates again, but if it doesn't happen we'll keep doing it. They don't know where things are. They're totally lost. And with that in mind, I'd like to mention an interview on financialsense.com, which is a very good website. It's a business owned by Jim Poplava from San Diego, financialsense.com. And I'll put the link below my video to this, interview that I listened to this past weekend. And Chris Sheridan from Financial Sense, he interviews William White. And William White is a Canadian economist. He worked for the Canadian Central Bank years ago. He was the chief economist for the Bank for International Settlements, which is the central bank's bank in Basel, Switzerland. So, he's not a kook. And now he's also working for the OECD, which is like a supranational economic organization in Paris. And in this interview, which I highly recommend people listen to, he basically says monetary policy has failed and economists are making a profound ontological error. And by economists, he means the central bankers, who are mostly economists. And ontological basically means it's the philosophical study of the nature of being or reality. And basically what he means by this ontological error is that central bankers and these Keynesian economists, they're making a big assumption, and in consequence, a big error to assume that they can control every nook and cranny of, an economy. U.S., economy, 17 trillion GDP, 12 people in a meeting room in Washington, D.C. They think they can control everything, and they think they should know what the rate is to the, nth, percentage point. It's ridiculous. And he comes out, William White, and saying they're making a huge mistake, and they are deluded. Basically, that's what he said, and that's what I'm saying. So it was quite painful listening to Janet Yellen. She's just, in my opinion, doesn't know what she's talking about. She's good at summarizing what the data have been. It says, oh, PCE has been at 1.7%. Core PCE has been at such and such level. It's higher than we predicted, but we expect for it to drop in the future. I just think it's just total baloney, and I'm very surprised that the markets still haven't, concluded, like me and a lot of other people, that this is just a farce. You've got supposedly, good GDP growth in the States, around 2%, maybe a bit more or less. You've got unemployment rate below 5%. Back in the 90s, if we had these kinds of statistics, you would expect, interest rates to be at least 4%, the Fed funds rate. And you'd expect a 5-year note to be at 5, maybe the 10-year note to be at 6, and maybe the 30-year to be at 6.5, maybe 7. But now, we've still got Fed funds rate around 0, 0.25%. We've got the 10-year note below 2. So I don't buy into all this stuff. The reason the Fed's, goes through this useless exercise is just to justify keeping Fed funds rate as low as possible, so they can keep, the rest of the yield curve as low as possible, 5/10, 5/10 and 30-year yields low, in order for the U.S. government to be able to finance itself. Because, the debt's doubled in the last 7 or 8 years, and if the markets were left to its devices, there wouldn't be a Fed funds rate anyway, because there wouldn't be a Fed. But if the Fed left the market alone and didn't try to manipulate it as much as it is, I guess the U.S. government would not be able to finance itself, and the economy would fall into even deeper recession or depression. And the reason I say even is because I don't believe in all the data that come out. And the reason the data is, they try to manufacture the data to make people think everything's fine. But at the same time, the Fed comes and they make all these counterbalancing statements to try to keep rates as low as possible. So we'll have to see how long, as the markets will keep, buy into this stuff. I think it was President Lincoln who said, you can fool most people most of the time, but you can fool some people most of the time, but you can't fool everyone all of the time. And I think there will be a tipping point where, Fed credibility and central bankers' credibility as a whole will completely, melt down, and there will be market mayhem. And you who listen to what I talk about should know, where you want to be when that happens. You want to be outside the financial system, holding physical assets, can be real estate if you have no debt, but also liquid physical assets like gold and silver. In terms of the market, Janet Yellen's speech has been considered to be fairly dovish. So the market is up, the Dow's up 55 points. Gold has reacted quite well. We went up to 1240, so that was up about $18, but we're now back down to 1234. The dollar's dropped quite a bit. It's down 0.6% against the euro at 112.60, and the pound is up 0.8% at 143.70. So yeah, we'll have to see how long more the delusional central bankers can hold on to their control of the markets and the economy. So if you like this video, please press the thumbs up below, and also share it with friends, and subscribe to my channel. Have a good rest of the week. Take care. Bye.